Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video I'm going to be reviewing some of the stocks that subscribers have mentioned in the comment sections, and I'm going to review them and I'm going to let you know my opinion. Now let's begin with the video. And the first thing is we're going to check on the QQQ, which relates to the Nasdaq. Now let's take a look at the stock charts. Now as you can see in the stock chart, this is a quite different picture than what we saw last time. The RSI is almost at the 70, which means that it's almost overbought, and we have the first support around the 147 and the second support around the 145, and the volume had been mostly negative until you saw that huge spike. That's what happened when Microsoft, Google and Amazon reported earnings. And now let's take a look at the SPY, which tracks the S&P 500. Now you can see the S&P 500 is overbought at this moment. There's support around the 254 and there's another support around the 250. The volume has been mostly negative until the last day, which was Friday, until Friday when we had a good day. And lastly, we're gonna take out the volatility index, which is the VIX, and as you can see the RSI for the volatility index is around the 44, and I think it's probably gonna consolidate between the 40 and 50 for the next few days. And if the volatility index goes below 10, we're gonna expect a lot of volatility during the next few days. So basically, based on those charts, I can see that the stock market is a little bit overbought at this moment. We might see a lot of volatility during the next week, and in this week we're gonna continue seeing a lot of technology companies reporting earnings, and we have a lot of political things that might affect the stock market during this week. But now let's take a look at the company earnings that subscribers have mentioned, and the first one is MercadoLibre. Now MercadoLibre was mentioned in the 5 stocks during August, and the company hasn't done that well. Now let's take a look at the stock chart. Now you can see the company is going below the support line. There was a support line around the 240, and the next support line is around the 220, and the RSI seems like it's going to reach the midpoint, and there hasn't been a lot of volume, and the volume has been mixed during the last few weeks. By the way, this chart is a mess. It kinda reminds me of the AMD chart because it's all over the place. But the thing is, this company report earnings, and if the company reports bad earnings, it might go under the price of 220. What I see mostly from the chart is that I see a gap between 240 to 255 price that needs to be filled. It will be interesting to see how the price is going to react after the company report earnings. Now let's go to the next company, which is JD.com, and we're going to take a look at the company fundamentals. The company has a negative PE ratio, and what that means is that the company is not making any money at this moment. The negative PE ratio is around 121. The company will report earnings the week of November 13 through the 17th, and JD4 PE is around the 43, and that means that the company expects to be positive very soon. And JD.com is negative on the profit margin with 0.93%, and it is negative on the operating margin with 0.16%. And we're gonna take a look at the income statement. The quarterly revenue growth is over 42%. And in the JD balance sheet, the company has around 6.22 billion in cash and 4.55 billion in debt. So it has a positive balance sheet, which is nice. Now I haven't done a complete research on this company, but from what I have read, the company had made a partnership with Tencent and Walmart. JD created an event on August 8 so they could increase the sales. Alibaba, which had one of the events which is Singles Day, which is November 11, has that type of event where they have a huge sales. So JD.com actually created a similar event, and they haven't discussed the real numbers, but they mentioned in one of the articles that the company sold over 13 times the regular item they usually sell. And like I mentioned, this company is competing with Alibaba, which is a huge disadvantage. And the reason why that is a problem is because the retail space is very competitive. Just look at Warren Buffett. He sold about 90% of the share from Walmart because Amazon is taking a lot of share from the e-commerce and the retail space. But now let's take a look at the stock chart to see how the company is doing during the last few months. Now you can see the RSI is a little bit bearish. However, that is actually a positive, and the reason why that is a positive is because it might have more upside than downside during the short term. And JD.com had a support around the 38. However, it moved down over that amount. The next support is around the $35 and the other one after 35 is around the $32 price. And what the company is doing right now is kind of filling up the gap. There's a gap when the company reported earnings in May, so the company shares probably will fill that gap between the 35 to 38 during the next few days before the company report earnings. So as you saw on the chart, probably the company will fill that gap between the 35 to 38 during the next few days before the company report earnings. Now, one huge problem is that the company is facing and competing against Alibaba. In addition, I have to do more research, have to read the transcripts for the last, I would say, 5 to 6 quarters to see how the company has progressed throughout this time. And at the moment, just like I mentioned earlier, the company has more upside for the short term. Even though the company is moving down, if the company report good earnings, the company is gonna go back up to the high 30s. Now, the next company that was suggested was Fiat Chrysler, and that's an automotive company. Now, let's take a look at the fundamentals. And in the fundamentals, the company has a P/E ratio of 7.96, which is normal. This is an automotive company. Most auto have the P/E ratio between the 6 to 11 at the most. And in the forward P, the company has a forward P of 5.81. And the next thing we're gonna take a look is gonna be the profit margin. And in the profit margin, the company has a profit margin of 2.50% and the operating margin of 5.27%. And as you see in the screen, the quarterly earning growth is 0.10%. Let's take a look at the balance sheet. And as you can see in the balance sheet, it has a cash of 15 billions and the total debt is around 23 billions. And in 2017, the company has gone up over 88%. So it has done really well. And I was reading some articles that the company owns the Maserati, so that means that it's able to benefit from those cars. And it is interesting to see that those cars produce more revenue than Ferraris. Now let's take a look at the stock chart. Now you can see at this moment the RSI is at the perfect 50 price, and the company has been consolidating during the last few weeks, and the company made a huge run from August to September. And the volume has been low during the last few weeks, and the support is around $17.15. And I was intrigued why the company moved up so much, and there were rumors that this company was going to be acquired. And I usually don't like when that happens, because if the rumors are not true and the company reports bad earnings, the company shares are gonna go back down. And for me, this company wouldn't be an investment. The reason is there's so many automotive companies that I would prefer to invest. One of those companies could be CarMax, that is more diversified. Now let's go to the next company, and that company is gonna be Teva Pharmaceuticals, and Teva Pharmaceuticals has been requested a lot during the last few weeks. Now let's take a look at the fundamentals. And now you can see in the fundamentals, the company has a negative P ratio of 2.18, and the company has a dividend yield of 8%. That is actually high for a pharmaceutical. Now let's take a look at the forward P, and in the forward P has a forward P of 3.61. Now let's take a look at the profit margins, and in the profit margin it has a negative profit margin of 25.19% and an operating margin of 23.25%. I don't understand why the profit margin is so bad. Now let's take a look at the income statement. Now in the income statement we can see that the revenue growth over every quarter is 12.90%. Now let's take a look at the balance sheet. Now in the balance sheet the company has 599 million in cash, and it has a debt of 35 billions. And let me repeat again, the company has a $500,000 in cash and 35 billions in debt. That is an amazing number. And I started to do some research why the company had a huge amount in debt, and the reason is the company acquired Allergen, and that left the company with a lot of debt. And when I was reading more articles, the company got the dividend and the company shares moved down over 24%. Now I did two charts for this company. One is the daily chart and the other one is the weekly chart. Let's take a look at the daily chart, and the daily chart is only for the last few months. And as you can see, the RSI is around the 25, which is oversold. However, the company experienced a similar situation when it was oversold for over 6 weeks, and that's when the company share price moved down a huge amount. And just look at the share price. The share price was around 33 at the end of July, and at this moment the share price is around $13. So that's an amazing to see. But now let's take a look at the weekly chart. Maybe the company might be able to turn around during the next few months. Now you can see in the weekly chart the company is still oversold. It has the RSI around the 23 and the volume, just like I mentioned, has been negative during the last few months. So as you can see in the weekly chart from 2015 to July 2017, the company was trading around the price of $45 to $60. So the company wasn't doing as bad, it was just trading sideways. However, since they acquired Allergen in 2016, the company has moved down a huge amount. Now for me, this is not a good company for me. There's an old saying that you don't want to catch a falling knife, and this company has moved down a huge amount during the last few months. And in addition, it has an amazing huge amount of debt that is gonna make it hard for the company to come back. So I will pass on this company. Now let's take a look at the next company, which is Disney. Now for Disney, we're gonna take a look at the daily stock chart, and as you can see, the RSI is around the 40, which is actually nice. If the company reports good earnings the next time they report, the company might go up quite a huge amount. And the company has a resistance around the 102, and it has a support around the $95, and the second support around the $90 per share. And there has been lower volume during the last few weeks. Now look at that support around 90. I think that would present the best value if the company were to drop the next earnings and continue moving down. And for this, I think this company, it is a great company that you can invest for the long term. If you plan to keep this company shares for at least the next 3 years, the company is gonna give you a good value. Anything below $95 would present a good value, especially at the $90 per share. That would be an amazing deal. And the last company we're gonna take a look is gonna be GoPro. And now let's take a look at the daily stock chart. And now you can see the RSI is around the 52, and I think it's starting to become more bullish. And the company has a support around the $9 and another support around the $8 with 50 cents. And the volume is starting to pick up during the last few days, and the company will report earnings in the next few days. If the company reports good numbers, I can see the price almost at the $12 per share, which is almost 20% upside from the price of $10 per share. So the stock chart for GoPro is very simple. I think we can see more upside than downside during the next few weeks, and I'm going to trade the stock. I ended up getting some shares on Thursday and some options on Thursday. The options are put options. In case the company doesn't report good earnings, I still will make some money, and if the company reports excellent numbers, I will get money from those shares that I bought. And if the company doesn't report good numbers, we can see the $8 with 50 cents, and probably in a few months, the company will be back to the $10 price before the next earnings. Now for the long term, GoPro is a different story. I think we have to wait a few more quarters before we can say that this company is safe to invest for the long term. And that is gonna be everything for the video. Please leave in the comment sections if you want me to cover a different stock. I'm gonna continue making these videos probably in the next few weeks. And remember, I'm gonna continue bringing videos about the stock market, personal finance, and how to make money. You can subscribe to the channel if you want to receive more videos. I'm gonna thank you once again for watching the video. Have an excellent day and take care, my friends.